Good afternoon. My name is Les Solgrove. It's Tuesday, May 19th. It's 12 o'clock noon. I'm a realtor with Via Group Realtors, and it's time for our weekly update. This is week 20 for the Des Moines real estate market, and started this process about 9 weeks ago when COVID-19 kind of started hitting our marketplace. And so we kind of start looking at what's going on in the real estate market each week and how COVID-19 is affecting us. So this week's topic is supply and demand week. And I think you'll see what we're going to talk about here in a minute. So let's jump right in here, first of all, with an article that appeared in Yahoo Finance. And the article title was US Metros in Best and Worst Positions for Pandemic Recovery. And basically, the article's uh, topic was identifying metropolitan areas that had the best capabilities for a strong recovery post coronavirus. And they did this by looking at two primary factors. One of the factors was the density of the population, and the other factor was the educational attainment. And what that really talks about, population density, basically is how packed in everybody is. So if a community doesn't have, like New York City is so densely packed, it's going to be hard for them to recover quicker because they have, they're just on top of each other. Iowa is out there with, less density in our population base, and that's going to help us recover quicker. The other factor that they used in this report was educational attainment, which basically means the ability to have good colleges. And Des Moines, being here in Des Moines, we have the luxury of having three or four great major universities in our state, and local junior colleges that are just absolutely excellent. So what this has done is that's put Des Moines, and actually Omaha as well, but Des Moines in this quadrant of one of the best metros being identified as being able to recover quickly. So I think that was just kind of a neat article. It came back and hit about May 9th, but I thought it was just kind of a neat article to share. And it was in Yahoo Finance. So, okay, every week I tend to come back on at least one of the graphics from the previous week to kind of show where the trending is happening. And this is my housing shortage and overage report. And so we'll talk about it this week and then probably let it go for a couple of weeks. But the way this graphic works is that on the left hand side, you notice we've got negative numbers and then a zero and positive numbers. And this is all based on the idea that uh, we have uh, we have months of inventory. There's a buyer's market, there's a seller's market, and then there's a balance market. And this whole report is based on the idea that we're trying to attain the best balance in our market, and the balance market is between 4 and 6 months of inventory, at least in our area here. And um, when the market balance is zero, or when you see this number zero and the trending goes across at zero, that means we don't really have to add or subtract many, if any, homes from the marketplace to hit that. And this particular graphic breaks down our market into four categories: single family resale, condo townhome resale, and then the same two categories in new construction. So what you'll notice is that three of our categories are hovering fairly close there to that balanced market number, and more so in the number of homes for sale. You can kind of see that new construction is probably the best balanced. It dips a little bit as we go through time. In fact, this past week, it finally dipped a little bit, and it says, hey, buyer demand is strong enough in new construction that we could add maybe another 50 or so houses and still be within that balanced market. The condo townhome new construction, you can see, has a positive number, which basically says, hey, there's about 118 homes as of last Sunday, too many in the marketplace. Now, there's more than 118 homes for sale in that category, but they just have a little bit of an overage, so a little bit more of supply than there is demand there. So that would basically put that particular category into a buyer's market, where maybe you have a little bit more time to find something, but it's also new construction. So the number we're going to focus on today, and we focused on in the past, is this huge blue line, which represents single family resale. And you notice that I've got a percentage above each of these, and 49% represents the amount of business or the amount of sales that inventory that single family represents. So this is about just almost 50% of our business in the marketplace. It's a huge market piece. And just to give you references again, these numbers in the middle represent when COVID-19 kind of hit that first week in March. And this will just more or less is our benchmark. We had a shortage of about just under 2,000 homes at that point in time. We saw at the height of the coronavirus, when it was really hitting us, we were short about 2,500 homes. And then it started to trail back up when buyers kind of backed away a little bit from the marketplace, and our inventory started to rise a little bit. And so that's why we saw that rise. But then, as you can see here, as we talked about last week, we ended last week at a week ago, not just this past Sunday, the week ago before that, we were almost 2,700 homes uh, short of what we needed for inventory. And then this week, you can see that the buyers have been out there quite a bit, and they're really buying up the inventory. Just to give you a reference, we have just under 1,600 single family homes for sale on the market as of last Sunday. 1,600, and it would take another 3,000, that 3,126 more to add to our market, almost twice as much inventory that we have currently to bring us up here into this balanced market. Now, are we going to hit a balanced market? Probably not. And don't get me wrong, this isn't all down because of coronavirus. We traditionally do see a shortage. We have been in a home shortage situation for at least the last 8 or 9 years, but I don't think we've ever seen it quite this short. So um, I do follow this frequently. I'll probably leave it alone for next week or maybe the week after, and we'll come back and revisit it and see if we've uh, seen any changes, unless, for example, we go way down even more, or we start to see a turn. But I just thought that's kind of a interesting one to watch there. And again, each week, I just can't hammer in deep enough that pending sales is the best indication of our market and the potential recovery that we're seeing in our marketplace. And on this half of the graphic, you see the dividing line. This half represents 2019, and it's kind of a picture of a what I would call a normal year, where we see about 5 months of real strong buyer activity, and then 7 months where it kind of tails off. So it's that first 5 months of the year we kind of see this inventory levels kind of jump up, and this is pending sale inventory, I should say, kind of jump up. Homes go into contract and they stay under contract, and then the buyers kind of tail off through that last 7 months of the year. And as you can see in 2020, um, you're going to look across here and you can kind of see one thing that's already different. And I would say that if I were to show this to someone off the street and say, okay, this is 2020, where did coronavirus kind of hit our marketplace? Most people would logically say it happened right about here, because that's where that peak is, just before the dip that we experienced. But in actuality, coronavirus really hit us right here about that first part of March. And what this period of time in between March and April, which is about 3.5 weeks, is I attribute it to a locomotive. If you've ever heard the statement that a locomotive takes about a mile to stop once they put the brakes on, well, that's kind of the way our real estate market was when coronavirus hit. There was a lot of buyer demand out there, and it took about 2 or 3 weeks for the buyers to finally pull back and slow down to the point where we saw this dip in our business here. And what you noticed is right after that, for about maybe 30 days, we had or so we had a little pause in our market business, and now it's back on the upward trend. And I want to show you, this is a National Graphic. I just literally pulled this just moments before the show today. I was looking going through Inman News, and this is a report produced by Compass, a real estate company, and it shows different metropolitan areas across the country kind of showing that same dip. So um, I don't want to say the safety in numbers, but it's kind of reassuring to know that it's not just Central Iowa and Des Moines that's kind of going down and coming back up. It's other markets as well. And these are large markets, by the way. This is San Francisco, Washington, D.C., Chicago Metro, Southern California, some of the big markets that are out there. Now you see there's, some ups and downs, some big ups and downs there. But for the most part, this trending is kind of following pretty much what we're seeing in the Des Moines market. Um, so let's take a look at this again. This is still pending sales. And here we are over here on this side. This little arrow represents where we currently are today. And this arrow represents about that March 1st mark. And if you look, we've talked about this graphic before, and we've really never talked much about the upside. We've always talked about what happens on the downside, the last half, why we have these little dips in there. But on the upside, you'll notice that with a few minor exceptions, you see that each year the increase in pending sales is pretty much a straight up line. Yeah, there's a couple times here where it kind of dips, and maybe that's from weather related activities or something, but where maybe there's a pause in the business for a week or so or a couple of days. But you notice for the most part, up until we get to 2020, you'll see that we were right on track to have a pretty normal year. And right here is kind of, again, where our peak market, where that locomotive was really basically able to stop or slow down. And you look at this and you go, well, okay, it's, I think overall, yeah, it was a pause. But I think what's kind of interesting is that it's not as big of a pause as perhaps, we could have seen. And the other thing that I want to point out is right here, this line right here, you notice that we're currently at about 3,000 homes under contract. And last year and the year before, so 2019 and 2018, we never hit 3,000 homes in the closing pipeline. In fact, over the last 11 years, we only surpassed that number two times, and that was in 2016 and 2017. And frankly, with the way the market is this year, kind of being delayed, I think we're going to probably see us at least hit these numbers. And I wouldn't be surprised at all if we go above these numbers. So this could be, um, because everything's been kind of compressed and everything's kind of coming back. I'm going to say that this is very possible that we're going to surpass these pending sales highs that we've seen in 2016 and 2017. So that's just a good testament that our market is really, really strong. We have buyers out there that are not only can buy, that have wanted to buy, but are now back in the marketplace, jumping in with both feet and buying right now. So on the flip side, now, of course, that was sale pendings. Let's revisit the year-to-date homes for sale count. And again, the dark line is 2019 sales. And you can kind of see homes for sale, and you can kind of see that we see this tailing up, and I'll explain that better when we go to the year-to-date report here, or the full year report. The green line shows you our current home for sale inventory levels, and the middle point here that have the indications of 3332 and 3433. Those are our benchmarks again for coronavirus, where we were, and everything was just kind of coming down like it was last year, pretty normal until we hit the coronavirus this year. And you can kind of see, I always say, we kind of went into defibrillation here. We kind of defib. The market was trying to recover. The homes were selling, and it just kind of up and down, but we didn't really grow and we didn't lose inventory until we got into that second or third week of April, when I really believe that sellers finally said, enough, we've got to get our houses on the market. And they started putting their houses on the market and have been continuing to do this to date. And what has happened is, we saw this initial rise where here they came on the market, and they're continuing to do that. But the reason why this number is going down instead of up, because of all this new inventory, is because all the buyers are out there right now. The buyers are taking advantage of extremely low interest rates. I've got a client right now that's going to get a 15-year mortgage for under 2.5%, which is just unheard of. So if you think about it, it's kind of like trying to fill a swimming pool with a garden hose. And yeah, over time it will fill up, but it's like the kids keep jumping in and splashing the water out. So it's taking forever to fill our inventory. And let's just take a look at this out at the full year view. So here's where we currently are, and there's that area where I said we kind of had a little bit of a pause or a defib. But what's interesting is if you focus now on this black line, which is 2019, And you see that the traditional path we see is the number of homes for sale. We wait for buyers to finally, buyers start to buy, but we wait for sellers to finally jump into the marketplace. And in a typical market, that happens in late March, early April, which happened last year in 2020. You see where they hit the market and started to build the inventory, and the buyers kind of followed along, and our inventory really started to build. And if you notice, let's now look at 2020. We were on that path right over here, but in 2020 now, I think we've kind of just paused, and now we're picking right back up. So rather than having this little slowdown of this downside of inventory, which is all being eaten up, which would normally be over here, it's now over here into the middle of May. And I think what we're going to see is this number rise, and probably not even at this trajectory. I think it's probably going to be even closer to a straight up jump, and probably get us back up closer to our home inventory levels of last year. So just some interesting things to kind of watch. We're under a very, very strong seller's market. We have so many buyers out there that the sellers are essentially in control of the inventory, and the sooner they get back into the market in full swing, I think the better we'll all be here. So we'll finish up here talking about open houses and a couple of the trends off of the dashboard. This is the weekly open house count versus last year. And again, red is 2019. You can see again, I always point out this dip here was Easter of last year. There's Easter of this year. Um, Look at what has happened here this week, though, in the purple. Week 20, we have started back up, uh, another rise of open houses. 3 or 4 weeks ago, I was saying I really don't think that open houses are going to come back as quickly, and I think there's still going to be some delay in that, and you'll see why in a second when I go and break down the open houses based on resale and new construction. But we've certainly seen a surge in open houses this past weekend. And just so you know, we're going to see probably a little drop next week um, compared to last year. We've got Memorial Day weekend coming up. So traditionally, open house traffic is a little bit lower on Memorial Day weekend. And so that's our little drop there. Then we've got Father's Day, 4th of July, Labor Day, those kind of things coming down the pike. But so if you look at the breakdown for week 20, which is off to the right here, about 3 times, almost 3 times as many resale properties were back open this weekend, from 67 2 weeks ago to 191 this past weekend of resale properties. But the builders have certainly doubled down. New construction now is making up, 532 of the open houses last weekend were open, and that's a pretty good number, because you don't see that 500 number in the purple over here in the spring market. You saw it early on a couple of times, but the new construction out there, the builders are saying, let's get our inventory out there and showcase that, and that's really the open house traffic is coming from the new construction. So we'll watch this again. We'll see if this trending on the resale starts to rise again. But it's still not, we're still short about 100 or so of where we normally are this time of year. Okay, the last one here from the dashboard. These two graphics here, just wanted to point out that our inventory last week, we had 315 new listings hit the market. These are added to the marketplace. This week we had a 313, so it's been kind of a steady input of homes for sale in the real estate market. Our week that we had the all-time high was back on week 10, just as the market was starting to wake up. I expect us to see this number start to rise. But the real number is down here under pending sales. Remember last week we had 315 also in this week 19. 315, we took 315 new homes into the marketplace and sold 315. This week we only took 313, added 313, and sold 351. So we're now outselling the inventory that's coming on the market, and that's one of the reasons why we're seeing our numbers go down. This 300 of homes for sale, this 321 number will go away next week, because we now have a new weekly high in pending sales added. So 321 was our high so far this year, and now 351 will take over that. And I'll pretty much wager that next week we're going to see more than 351 homes going under contract. So this number is probably going to get beat out. And you can see that the black line is 2019. So we're still well ahead for the most part of last year. So it's a good sign again of recovery. So the dashboard is out there. All of these graphics will be posted. All these graphics that you're seeing today, plus more, will be posted at Simply Des Moines Stats on my Facebook page, Simply Des Moines Stats, and that's where you'll find all of these graphics and more each week. The year-to-date close, the median sale price, and then of course these across the bottom here. And this just kind of gives you a weekly snapshot, average weekly snapshot of each of these categories, so you have the information to go out and talk. So next week, I have a special guest joining me. Linda Westergaard is going to be joining me. She's a friend of mine. She's a fellow realtor. She represents Ward 2 for the Des Moines City Council. So we'll have a lot to talk about next week ahead of my statistics and market stats that are happening. I'm going to ask Linda some pretty easy questions about what's happening in the city of Des Moines in the areas of such as parks and public pools and some of the areas that are that are being very, very affected right now by COVID-19 that obviously is going to affect our community. Also, maybe she can give us a little update as to maybe how some of the infrastructure works are occurring. Like I know there's all kinds of street work being done all across the city. If that's being impacted budget-wise, and if that's going to curb maybe some of that work as well. So I promised her I would give her some questions ahead of time so I don't put her in a corner. But I would certainly invite you to watch next week. That's May 26th at noon. And we'll start off with Linda, and she'll be able to kind of give us an update. I'm really looking forward to this. So again, the last place you need to go to is facebook.com/Simply Des Moines Stats. This is the site that has all the graphics, and we'll have them from this past week will be uploaded here after this broadcast today. And I'll also have a few of these graphics over here on Simply Des Moines. But if you're into the graphics and the stats, this is the geek site over here, Simply Des Moines Stats. So that's basically it. I appreciate everybody's input. I'm getting lots of people texting me all week long saying they're getting good information out of this. So that's good to hear. If you're finding this information useful, please share the link each week. And I look forward to seeing you next week when we see Linda Westergaard at noon on Tuesday. Talk to you again. Thanks.